Good morning. I'm Jill Malandrino, global markets reporter at Nasdaq, and joining me is fan favorite Phil Davis, who's the CEO of Phil's Stock World. Phil, as always, thank you for joining me at MarketSite.
Thanks, Sam.
Where do we even start? I mean, I was thinking about you this morning on my way in, and I'm just like, I have so many questions, and clearly the first one is, will we ever see a trend change in this market? Because it is pretty mind-blowing how resilient it's been with everything going on.
Yeah, it's not really going to change until the central banks stop buying. And I don't mean just the Fed. The Fed mostly buys bonds. They buy all the T-bills that our government's selling, so they're buying up all the debt, which actually makes our debt look cheaper than it would be. So, we're borrowing a ton of money still. And the Fed buys it all, so they buy it at ridiculously low rates that no normal person would pay. But the Bank of Japan is buying $80 billion worth of stock every month. They're buying equities. The ECB, the European Bank, is buying equities, probably about $60 billion a month, mostly equities. They're buying hard assets. Those guys are the buyers. So when you see a dead quiet market and it just goes up and up and up, that's because they're buying.
Right.
They're on order buy all the time, every day. They're buying relentlessly. Well, you got $140 billion a month coming in, so $3-4 billion a day of market balance is pushing that side.
Well, that's what we saw last week, right? Last Tuesday, right before we had the sell-off following, the North Korea rhetoric, you looked at it, and every 5 minutes it was just up, new high, new high, new high in the S&P, and it was unbelievable. It's like it almost went off a complete cliff once. Because
that's, if you look at the normal market volume, is maybe $50 billion a day, I would say. If I had to get maybe $100 billion of equities traded in a given day. But most of them are buy, sell, buy, sell, buy, sell, so it kind of evens out. But when the imbalance, when there's a push of a very small amount pushed to the upside, an extra $3 billion on $100 billion of trading would push the market up a couple of percent. So, what you're seeing is that these guys are buying everything that's being sold and keeping a really floor under the market at all times. But it's only a certain amount every day. Like when the Fed used to do their POMO operations, right? You'd see what they did every day. They do $1 billion here and $1 billion there, whatever. You'd see every day how much they were doing exactly to the penny. It was published. So in this case, you have the same thing. So on a heavy volume day, the selling overwhelms their input. But on a light volume day, their input is just swamping to the upside and pushing the markets higher.
Do you think we would have gotten to a higher level in S&P 2,500 if we did not have the North Korea blip last week?
I think 2,500. See, we hit a major thing. That's the interesting thing. We're shorting at 2,500. We're shorting at. We actually shorted a bit today, even though we're wrong so far. But the significant levels are where more and more computer programs will kick in. More and more of the algos are going to start kicking in and hitting the sell button. Like they get to a certain level, 2,500 is up 25% from 2,000. They get to that level, and all of a sudden algorithms kick in and say, okay, now we're going to reduce by 10%. That is a lot of selling that kind of swamps the system, and then you're going to see like a bit of a pullback.
So you're almost hoping that it gets to 2,500 then? As a short.
Yeah, well, if I'm shorting, we're basically legging into shorts now with the anticipation that when we hit the Nasdaq 100 is going to hit 6,000 very shortly. At the same time, the S&P hits 2,500. They're both very significant marks, and that can trigger a lot of selling. And that's the thing. If my theory is correct, and I think it is, if my theory is correct, that means that the central bankers are going to get swamped, and they're not technically trying to prop up the markets. They're just trying to.
Like, what else can they buy?
What else is there to buy? They've bought all the debt. This is the problem. In fact, Draghi, one of the positives today at the open of the ECB, we had a little jump up at the open at 3 a.m., was because Draghi said that there wasn't going to be any big changes at the Jackson Hole meeting where he's meeting with the Fed people. That's coming up in a couple of weeks. No change in policy. Now, their policy is constantly buying, and putting money into the market. If they're not changing it, that's bullish. Right. But God forbid these guys ever start selling. Where are the buyers going to be? Who's going to be buying this stuff at these prices?
Right.
That's when you got a potential catastrophe.
I mean, who has the balance sheet to do so?
Yeah,
right?
who's going to take it off their hands? It's the same thing with the Treasury bills, though. If they stop buying, even our Fed too, if they stop buying, first of all, we don't know that there's any buyers besides them for the T-bills. They've been the only buyer for 5 years of all the T-bills.
Right.
And all of our debt has gone to the Fed, basically. Their balance sheets jumped up several $1 trillion. How are they going to sell that at the same time as our government is still borrowing $100 billion a month?
Right.
How is the Fed going to sell $100 billion a month? They've got $3.5 trillion worth of T-bills, basically. How are they going to sell 35 months worth of T-bills, even if they only sell $100 billion a month? That's crazy.
Right. Well, it's the unwinding process that
So
is
it's
the
gonna be
big
70
elephant in
months?
the room.
Is it going to be 50 billion for 70 months? How are they going to sell 50 billion when the government's still borrowing 100 billion? How are we going to find buyers for 150 billion in debt now when we can't find buyers for 60 or 70 billion, in the first place?
Right. Well,
That's the catastrophe yet to come.
all right. Well, we'll leave it at that. Thank you, as always, for joining me. And Twitter, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.